The whole calculation, I risk 1% to gain 10%. So hello everyone to a new video. Today I will just speak about a trade I took in USD and I will be unboxing a new watch that I bought. And this is not to brag, this is not to say, oh, I got a new watch. It's not even very expensive. It's just about documenting my journey and it's more to myself. So when I get back to my videos, I can see the progress I made. So this trade was in USD. I was marking my zones in the 5-minute time frame and I executed at the 1-minute time frame. It's more like advanced scalping. If you are a beginner, I will advise you to stay out from the 5-minute and 1-minute, maybe start in the 15-minute and 30-minute. It was a live trade that I recorded and let's go in details right now. So here, as you can see, I was marking this structure around here. The price tapped in and took some liquidity and got back for the downside, and I was waiting for the price to go upside and take these highs around here. These highs is like the liquidity. People are putting their stop losses around here, so I was expecting a huge pressure from the algorithm to push outside for this supply around here. Okay, actually when I got this type of plays, I do something very smart. I don't take one trade. I break my risk to 3 or 4 trades depending on the market structure. So in this trade, I will take 3 trades, but it's just one trade. So the idea is, if you want to risk 1% of your account, you want to take 3 trades instead of 1. You're gonna risk 0.33 at each trade, and those 3 trades are gonna make the 1% you are gonna risk in general. I will explain more when we get to the details. So as we can see, I saw the huge momentum for the upside at the 5-minute time frame, and I went to the 1 time frame. Let me see. So here is where I executed the trade. I took the first 0.33% of the 1% I want to risk in general. So why did I took it like this? Because I was expecting the price to go downside to fill some liquidity before going for the upside, but I didn't want to risk waiting for the price to go downside, because it's a game of probabilities. The price can just go up and don't tap my limit order. So I took my first position around here, 0.33%, and let's see what happened. So the price actually started going for the downside. I was marking this liquidity trend line because I know some people are gonna take shorts, but it's my entry to go for the upside, because this is how I trade. I trade based off liquidity. So when I win, another person is losing. So here where I marked my next demand, I was marking the 3 main demands where I'm gonna take my trades, 0.33, 33, 33, and all of them are gonna make the 1% I wanna risk. Okay, so here is my next dune. I have put my limit order on this area and I waited for the price. Of course, I was marking the supply area for the upside. This was my target, because many orders are gonna be staying there. So I'm just targeting the liquidity, where the price and the algorithm wanna go, right? So let's see. Alright, so here the price started tapping to my next trade. This is my second trade, but all of these 3 trades are gonna make the 1% I wanna risk, right? And here I was marking my last demand area, and this is like the last area where I wanna take the trade. So as we can see, I was making the last hope for buyers right here, but I was also expecting some liquidity grab behind it. As you can see, my stop loss, it's not just in the zone, it's below it, right? Because the markets are gonna manipulate SMC traders and people who are gonna take this side stop loss. I was expecting some manipulation in this area. As you can see, the market just tapped into my 3rd trade around here. I didn't take it right away. I was just waiting for the price to show upside momentum. So here is exactly where I took it, right? As you can see, this is like the liquidity grab from the downside. I was putting my marker for the liquidity from this trend line, right? Because all of the people are shorting the market are gonna get liquidated for the upside. This is why I took the 3rd trade, because I saw the liquidity grab from the downside to the upside, right? All of these 3 trades are gonna make the 1% I wanna risk, but are gonna put a high risk to reward, because every risk from this 0.33 is like 1 to 3, 1 to 4, and 1 to 22. So here is where I was waiting for the trade. I was putting my markers, my liquidity zones. Actually, I just waited. I didn't take anything because I knew if the price went for the downside, I was gonna accept and expect to be the liquidity. And actually, while waiting, let's see the package I got. It was a nice watch that I ordered from the internet. Actually, this is not to brag like I just said in the beginning. It's just to document my journey and to share everything I take with you guys. It's not actually very expensive. It's just a premium mode that I wanted from a long time ago and I got it today. So let's see a quick unboxing and let's return to the trade. So here I was just waiting. As you can see, the algorithm started like taking orders here, consolidating, taking orders, right? Okay, so here where I started recording again, the market started to go into my favor and it just took my take profit right here. As you can see, this is like an extra tip for everyone. I didn't put my take profit just in the supply area. I put it like just below, like 2 pips below, because sometimes the algorithm won't touch it. So here is how it looks in the 5-minute time frame, and here is how it looks at the 15 time frame. So let's actually calculate how I took this trade and how much I risked and how much was the reward. So the first trade was 0.33, 0.33, 0.33. And the reward was like 3 times, 4 times, almost 5 times, and the third one was like almost 23 times. So the whole calculation, I risked 1% to gain 10%. So this was a full breakdown for the trade for the day. Please, if you enjoyed the video, give me a like and subscribe if you want to, and see you soon.